Hello everyone, this is Evan here from the Trade Risk on Saturday, July 9th with a weekend market recap video. We are first going to analyze the current market environment. We're going to look at some other markets, sector analysis, and then finish off with some individual names. Now we're going to jump right into things today. S&P 500 closed the week real strong here, up 1.49% just on Friday alone. And if we go to the weekly chart, you can see we finished up 1.3% on the week. Now a few important things to note. This is a all-time closing weekly high for the S&P 500. That's very bullish. And notice we also snapped and closed above this trend line that is extending off of the 2015 highs. We've discussed this at length. We've been watching this area for quite some time, and you can see we got a nice close above it, strong close on the highs, and this looks good. So in my opinion, the breakout here is in motion. I know we haven't quite hit that intraday all-time high in the S&P 500 just yet, but for me, this is kind of an all systems go breakout right now, resolving higher out of this range, and I'm saying it's in motion. Can we still fail? Absolutely, but for now, momentum is strong. We're seeing us get there in a pretty fast momentum style way. Notice the V-shaped sort of rally here off of the lows. Of course, we had this kind of 2-day capitulation. That was the whole Brexit event. We've already discussed that at length a few times, so I won't get into it in this video, but you can see we had that V-shaped recovery, a 3-day more or less pause here, dance around some of these moving averages in this key 210 level that was acting as resistance in the past. And then Friday, with the help of jobs number catalyst, the market really decided to ramp higher. Super strong breath on Friday, and things look good right now, right? The bulls have the ball. Momentum's pointing higher, fast moving averages starting to raise higher here. And right now, I think the thing that gets me most excited, and I've pointed this chart out, and I think a lot of people have pointed this chart out recently, and it is this here of the cumulative advanced decline line. This is a weekly chart of the cumulative advanced decline line. And notice here, this goes back a few years, but the top pane here is the AD line. And notice the breakout. We were in this, downtrend, this channel here, falling channel here for basically since we started to top out in 2015 in this big range, S&P 500 charts on the bottom, and then we started to really accelerate higher here through the month of March and April, and we've been breaking and trending strongly to new all-time highs, and that's very, very bullish. Notice every single time in the past that we've rallied back up to the highs here in this S&P 500 range, if we go back to the weekly chart, it's always been on sort of weak internals, not a lot of participation here. This is the first time where we're really challenging highs while the AD line has already been making new highs for about 2 months. So this is in front of price leading. That is historically a very bullish indicator. It's not a guarantee, it's an indicator, and it's used for context about the current market environment. But that's really what has me excited here, and gives me sort of the confidence to go with this breakout and to position accordingly if we do continue to see follow through here. So the other thing I want to keep in mind is that this breakout is an 18-month range, and again, I'm using this term that I'm probably going to get a lot of criticism about, because some people would say this hasn't broken out yet, but this is a very, very large pattern here. If this is a true structural resolve higher out of an 18-month range in the S&P 500, we're in store for what could potentially be multi-week, multi-month, maybe even multi-year run higher. Again, this is with optimism at its max here, and I'm not saying it's going to happen in a straight line. There's going to be jukes and jives, but just realize that if the market really does start to shift dynamics here and starts to trend higher like we saw in 2013 or 14, then the game plan certainly will change a little bit for, depending on your trading strategy, things are going to shift a little bit. So keep all that in mind. Look, a lot of these things I'm talking about early. I'm just wanting to point out sort of the significant area that this market is at. For us, we're long this market. We've been long the market, and we got got increasingly more long throughout this week, particularly on Wednesday on this pivot day here. And Friday is where we really kind of bumped up our exposure, and we're really sort of pressing on the long side now, looking for some continuation. Again, it might not be easy. There still could be plenty of head fakes, but for now, things look good, and we're going to play those probabilities that the upside direction is the path of least resistance. Now, if we go to the IWM, you can see this had a nice little breakout here from this trend line. Notice we're not anywhere near all-time highs here in the small cap. We're still very much range bound, but we did finally start to break this series of lower highs and lower lows. As you can see us starting to rally back higher now, getting above 120. This is going to be a very significant level, so in the IWM, so perhaps that's some type of magnet there in the near term. We'll have to see if it can get up there, but that'll be a crucial level for IWM. And then the Qs also coming right up to the top end of this range here. You can see this is the trend line that extends from the April highs here, rolled over in April, rolled over in June, and now we're challenging sort of this area here. If we can get back above 110 and 111 and start to really resolve higher with the Qs and NASDAQ 100 supporting this market, then we're going to be in business. The other thing to remember also is that we have earnings season coming up in just a couple of weeks. Actually, I mean, it's partly underway and starting up even sooner than that. So just be aware that we do have those sort of headline individual names coming into play pretty soon. Now let's take a look at some of the other markets here. TLT continues to just plow higher here, ignoring gravity, and just a series of gap ups here on the weekly charts. And you can see really extending away from the 8 period. So getting really frothy in TLT. We'll have to see. I mean, again, it's super tough to chase this here. It's equally as tough to short it though, but I know that's sort of what it seems to be consensus is to try and get short this, and again, not for reasons that aren't obvious, but momentum sort of at its finest here. Again, we discussed this in the midweek video. If this is some sort of final stage blow off, things can typically go much further and faster than most people realize. So just keep an eye on that. Right now continues to extend. You could probably put some fibs extensions on that, something I haven't done. I know this measured move, if you took this leg higher here and projected it here, I think we've already exceeded that or right around that level. So just, some context there if you want to keep that in mind. If we go to USO, you can see you get a lot of lines drawn here, but essentially this wedge that we broke down from, and now it's just very messy kind of in this downtrend now, and it's just a pretty messy trading vehicle right now, and we'll have to see if it's really going to roll over here. That could put some pressure and a damper on this bull rally that we're seeing across markets if USO really starts to crude oil really starts to roll back over. But we'll have to take that. We'll have to take that day by day and see what happens here, but clearly momentum starting to shift back to the downside. 8 and 20 starting to curl over. Weekly chart looks horrible. Monthly chart looks even worse. So we'll have to see what happens there with USO if the bulls can step in anywhere below this $11 level. There's some support here from May. Let's see if 1060 or so acts as a level that buyers come back to. UNG, natural gas, just hanging in there, still in an uptrend. Had a pretty violent sell-off here on Tuesday, down 8%, and since then it's sort of just stabilized, moving sideways, still in between, actually still above the 8 period and still above the 20 period, which are still bullishly aligned. So still a strong trend. You can see it broke out from the downtrend here that we have discussed at length. So UNG still holding up. Gold also pushing higher here, similar to TLT. A lot of people perhaps looking to short this, getting a little stretched, getting a little frothy, but still it's just in a strong uptrend right now. So if you're not involved, it's tough to do much with this. If you are involved, just continue to trim and trail. Silver, similar situation, still extending to new highs here as well. Got a lot of previous supply in here from 2014 that it's going to start battling with, so just keep an eye on that if you start looking left inside this range here. Let's see if that kicks in at any point, but so far so good for the silver bulls. And I think that's it for other markets. Let's take a look at some of the sectors here. here. I mean, a lot of sectors are really coming to life. I think the standout is healthcare. We discussed this in the midweek video, really starting to break above some key levels, resolving higher out of, basically the highest levels since August of 2015. So pretty impressive move here recently in healthcare. Cyclical, the discretionary sector had a nice day, 1.74% up day on Friday, really trying to lead and take charge here and extend to new highs. Not quite there, but almost there. Technology also had a nice day on Friday. And industrials also had a pretty good pop. So a lot of participation. That's what's so encouraging. On the weak side, still financials on a relative basis. They had a good day on Friday, but all things considered, when taken against the other sectors here, still one of the weakest above the bunch. Perhaps there's some mean reversion that'll come into play there. Materials also had cooled off recently. They were a super strong winner for the beginning half of 2016, first and second quarter, but starting to slow down a little bit, but did catch its breath a little bit here on Friday. And then energy, with USO, oil, natural gas starting to take a little bit of a pause here. So have some of these stocks. Again, still, had a positive, constructive week, but on a relative basis are the underperformers. So that's sort of the sector breakdown there. And now if we get into some individual names, Amazon the first, nice push to all-time highs here on Friday, 1.25% to the upside. We discussed this in our midweek video where we got long this on Wednesday, and so far so good. It's been extending higher for us. So we're still in the name, looking for higher. Twitter also really catching a nice move here on Friday, up 4%, getting through that $18 level. We discussed that level. If you look on the weekly chart, you can see the 820 finally starting to try and make a curl over. This hasn't happened since 2015 April or May. Right in here, we've been in this pretty strong downtrend line, so starting to finally get constructive here. On the weekly time frame, has a lot of work in front of it, but so far so good. Facebook also, I think, is interesting on the weekly chart. You can see this stock has typically found support at or right under this 20 period EMA, and this time was no different. You can see dip buyers stepped in basically as we were losing that 20 period, drove us back higher. Now it looks like we're have some reasonable higher low to work against, and the market is so far heading higher. Netflix also on the weekly time frame, I think, looks interesting. You can see if this is a pattern that you like to play, these this nice triangle here as we get tightening. Higher lows, lower highs on both sides here. This could be an interesting for some type of breakout. You can see it tried to resolve higher this week, got faded. So keep an eye on, maybe that $100 level. If it could start to close above there, maybe there's something moving there. And if it get below, 87 or so, maybe you have some type of short opportunity. I suspect, though, earnings will be the catalyst to move us out of that range. And then finally, we'll just look at Google here and notice, again, weekly chart. I think these are all pretty important. Last week, you can see we got sort of that, false break below support, below this, this wide area. Draw this with a crayon, not an exact line of where support and prior buyers and sellers have sort of, shown interest. So you can see we've sort of reclaimed that $700 level, and perhaps we're going to push higher here back into this wide, 100-point range that we've been in now for, over a year in Google. So keep Google on watch if that's your sort of play there on the longer term basis. And I think we'll just wrap it up with that. Hope this video helps. Good luck out there, and I will catch you guys next time.